to another video. Now today we are going to speak about the situation that we got here on gold from an order flow, fundamental, technical and a sentiment perspective. If you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, just let me know down in the comments below exactly what it is that you would like for me to cover in my next video. Now, if you start on the monthly time frame, we can firstly see how this level in the market over here acted as a strong level of the resistance. So we can see how the market broke above that resistance, and all of that resistance now once again support. So we can definitely expect the market to pull back lower before the continuation. Now, this decision purely comes from a lot of economical factors that we are going to discuss. Just to just to confirm, just to indicate you why we are looking for the market to go and dig that lower there as well. Now, from a weekly perspective, what do we see? Firstly, we can see how the market had printed this triple top, broken above that level of resistance. All of that resistance became support, so we can expect a slight pullback before the continuation to the downside. Now, from a daily perspective, what do we see? Now, here on the daily time frame, we have two types of structure that we need to look out for. Firstly, we do have the opportunity for the market to print this information. Now, after information, you expect a pullback to the neckline before the continuation to the downside. We can also see how the market printed this level of resistance there, broke above that, came to test it as support. Support did not hold, the market broke below that support, and all of that supports now turned the resistance, giving us an indication that we can also expect the market to create a head and shoulders pattern, which is considered a bearish pattern from a technical perspective. Now, if you take your Fibonacci there from the high to the low of that impulse, you can see how we have the 0.382 lining up perfectly with the structure in the market here as well. So we can definitely expect gold to pull back slightly before that continuation to the downside for the market to go and test that previous level of resistance that is now turned support from a monthly perspective. So we're just going to leave that right there. Okay, I'm not sure why this thing is acting up, but in any case, so you don't expect the market to pull back before the continuation to the downside there as well. Now, the next thing we are going to look at is the commitment of traders. So what the biggest speculators are doing in the market. Now, if you look at last week's report, you can see how hedge funds added another 10,441 long positions. They also closed minus 6,325k short positions. We can see how the overall net positions had increased from 172k to 274,000, which is quite interesting to see. Now, for those of you, and this is one of the reasons why I say that you cannot always go just based off this report, because the people, these numbers comes from investors, so it's an investor sentiment, and these numbers doesn't mean the market is going to go in that direction, but we use this as a confluence in the market as well. Now, if you go back to the technical data, next thing we are going to look at is sentiment data. So the sentiment data tells us what retail traders are doing in the market, and it's no surprise why we see the market plummeting to the downside, because we've got 62% of retail traders buying and we've got 38% of retail traders selling. So giving us a further confirmation that we can expect this move to the downside to take place for gold. Now, the next thing we are going to look at is the fundamental data, which is the key economical factors that's going to drive this market to the downside. Firstly, gold is driven by two factors. Currently, it's a safe haven currency, so it's driven by the situation between Ukraine and Russia. So as tensions were growing between Russia and Ukraine, we saw this massive bull run on gold, but things are starting to slow down now, and as a result of that, we see that uh, um, we see investors now slowly starting to move their money back to, well, I don't want to say normal, but it's being moved mostly to the dollar index, because there's a lot of economical factors that we're going to discuss, so that's going to make the dollar increase in value there as well. Now, the sentiment data, like I said before, you always want to be on the opposite side of what most retail traders are doing. So we are looking for a selling position, and we can see 62% of them are buying. Next thing, we can see this article here from mining.com says your gold prices slide on hopes of progress in Ukraine peace talks. So it says here that gold prices slid over 1% on Monday. Risk appetite improved amid cautious hopes for progress in talks between Ukraine and Russia. Now, I've said this many times before, so all of this is purely based off speculation. So investors are hoping that Russia and Ukraine is going to come to some sort of an agreement, and as a result of that, we start seeing this selling pressure until something actually comes from it and something actually happens as well. But gold's not only pressured by the situation between Russia and Ukraine, gold is also receiving a lot of pressure due to high inflation in the US, leading to higher interest rate hikes, leading to a higher dollar, meaning a lower gold price there as well. Next up, we do have the consumer price index here as well. So this measures the consumer spendings. We can see based on the last report we received that the consumer spendings rose from 7.5% to 7.9%, which means higher inflation overall. Now, Powell said in front of Congress when he testified, he said that if the CPI data comes out higher than what they anticipated it to be, then the bank will have no other option but to hike interest rates more aggressively, meaning that the dollar will increase in value due to higher interest rate hikes. And that means the dollar is going to lose its value very quickly, dragging the stock market with it down as well. Now, the CPI data that came out was at 7.9%, the previous was at 7.5%, giving us an indication that inflation is higher than what it was. Next up, we do have this article here from CNBC. Yeah, just telling us what we can expect from the Federal Reserve at the meeting here as well. So I'm just going to dive straight into this interest rates over here. Markets have no doubt that the Federal Reserve enact will increase of a quarter percentage basis point. Now, for those of you that were sitting on that Instagram live that I did, I told you guys that the Federal Reserve is inclined to hike interest rates by a quarter basis point because the central bank generally doesn't like to surprise markets. That's almost certainly um, will happen. So we can definitely expect a 25 basis points. However, it was said that when Powell testified, he said that if they do get a higher CPI number compared to the previous, then the bank is going to hike interest rates more aggressively. So it could even be surprised with a 50 basis point there as well. But as you see here, the 25 is a given. It's going to happen. There's no questions about that. The dollar is going to rise. But what matters is what comes thereafter. Okay. A lot can happen between now and the end of the year. The uncertainty is super high. So we know that we are going to get a quarter basis point to start off with in this week. That is going to happen. There's no questions about that. But the most important thing that we do need to take in mind or that we need to take into consideration is that what is going to happen in the long term. Is this going to ease the inflation because the tension between Russia and Ukraine is further driving the the situation for the USA as well. Next up, this article is from Reuters. It says here, Russian central bank holds purchases of gold from banks to meet household demand. This means that the central bank has announced that it will suspend the buying on gold from banks on Tuesday as well. That's also got a high driving factor behind why we saw this massive gold drive to the upside, because the central bank of Russia had said a couple of weeks ago that they was going to start buying gold, and as a result of that we saw the market move to the upside as well. While it is unfortunate that this bullish run was quite nice and quite interesting, but like that song goes, all good things must come to an end. And unfortunately, this is the end of the line for gold, and it's time for the market to give back all of the gains that it has acquired. Now, that is how we're going to trade gold going into this week. We've got the interest rate hikes coming out on Thursday, so we could see this pullback leading towards Thursday, and then see that massive sell-off there happening there as well. And then last but not least, like I said, if you look at the 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 forecast for the Federal Reserve, right? So if you look at the forecast for that, you'll notice that investors are expecting it's expecting an alpha basis point hike. And sometimes what that means is that when the market doesn't get what it wants, it tends to react negatively off it as well. But that still doesn't mean the overall momentum of the market is going to be driven. So if you look at Forex Factory, you'll see the forecast is 0.50, and we know that the Fed is going to give us a 0.25. So when the Federal Reserve does come out, gold is supposed to go to the upside, but gold could, the dollar index is supposed to rise, but if the market doesn't get to 0.50, we could see the dollar index weakening in, just a dip, just to confuse people, and then move to the upside. Because even though a quarter basis point is higher than what it is currently at the moment, it's the market sentiment that counts. And if they want a 0.50 and they don't get it, then they tend to create, go on like little kids, and they, we get that slight pullback. But that doesn't mean the overall, that doesn't change the overall economical situation for that country. So the dollar index, guys, is going to the moon, and good luck for everyone in the US. In any case, guys, I want to say thank you so much for your time. Thank you for taking out the time to watch this video. I want to say I appreciate the support you guys have been giving the channel. Thank you for your time, and as always, cheers for years.